Hello, everyone. This is Ziad Sabah. I'm the moderator of this session. I have the pleasure to introduce Peng Cheng, who is the head of machine learning strategies at JPMorgan. He leads the big data and AI strategies research effort in New York. He's responsible for delivering cross-asset investment strategies. And previously, he covered equity derivative strategies in London. Prior to 2010, he was convertible and volatility strategist at Barclays, and he holds a master's degree from the University of California, Berkeley, and is a CFA charter holder. And without further ado, I'll pass it on to Peng.
All right, thank you very much, Ziad. So hi, everyone. Very happy to be here making the presentation. So today, the topic of my talk is NLP for investing. So I'm going to discuss a little bit some of the use cases of natural language processing in our day-to-day work. So, before kind of getting into the main topic, let me just talk a little bit about my team. So our team is part of JPMorgan Global Research, where we are facing our clients, which are buy-side hedge funds, asset managers, et cetera, and people that we interact with are usually portfolio managers, analysts, and traders within those organizations. So our team is composed of around 10 strategists globally. So we have strategists located in Australia, Hong Kong, India, London, and New York. So as part of day-to-day job, we dedicate a lot of our time to producing content about big data and machine learning. But at the same time, we're not kind of hardcore numerical quantitative researchers in the sense that we don't just sit at our desk and think of, okay, what's the newest or latest optimization algorithm. What we do is we look at the applications of machine learning and see how it can be incorporated into investment decision-making process. And that's basically where our clients are interested in, right? Like at the end of the day, how do I make money with machine learning and big data? So what we do is we produce content in the form of research, reports, as well as events, so educational events, conferences, et cetera, where we try to provide our clients with a broad range of content. So some clients are more sophisticated and they're interested in the details, the technicalities of algorithms and models. Others are more at the introductory level where they're experienced with finance, but a little bit less with the numerical aspects. So we try to provide educational materials to them as well. So that's basically how we try to add value to our clients and investors. So obviously, natural language processing being a very hot topic is one area where we examine extensively on how we can apply it into investing, right? So in this presentation, I'm going to give two examples, one using public data and another using JPMorgan proprietary data to illustrate the different aspects of natural language processing that is used within the JPMorgan research. So first example I'm going to give is the US election in 2020. This goes without saying that it was a very important event for investors, right? Like depending on who wins, the implications on your portfolio, on your future economic outlook could be vastly different. So of course, the biggest question is, okay, who is going to win? Is it Joe Biden or is it Donald Trump? And of course, at that time, I think probably the most readily available information is just from public polls, right? But we all know that there's been a lot of discussions around, okay, how useful are the polls? Are they really accurate? What are the drawbacks? Now, we think that they're still valuable, right? But specifically, I think there are a couple of things one needs to be aware of. One is with these public polls. At the national level, it's pretty much meaningless because we all knew that, okay, Joe Biden was going to win the popular vote, right? But what's more important is at the state level, how can we tally up all these electoral college votes? And that becomes a lot trickier because, as we all know, over there, the sample size becomes much smaller because, let's say you have 50 states, maybe there are 10 or so swing states. Usually public polling companies will not be able to dedicate the same amount of resources into all of those states, and therefore the margin of error could be quite large in any of those states. And by definition of being swing states, the difference between these two candidates could be very small. So let's say in the states where you have 3% margin of error from the polls, and if one candidate leads another by 5%, then this lead could easily be obscured by just margin of error. And also, of course, there are lagged indicators because usually it takes a few days for the polls to be conducted and to be aggregated. And a lot of times, some news events happen. For example, Donald Trump was infected with COVID, and those kind of events may not be accurately reflected into the polls in a timely manner. So those were the kind of drawbacks of polls, besides all of the kind of the ones we also know about, which is maybe they undersample certain parts of the population, et cetera, right? So we decided to kind of look at an alternative measure, and in this case, we partnered with alternative data company called QuantCube. So it's a French-based company. And then what we do is we actually look at social media sentiment, and in this case, Twitter. And then what we do is we go to Twitter, and then we examine the tweets and look at, which tweets are pro-Biden, which tweets are pro-Trump. And then we count the number of users who are pro-Biden versus the number of users who are pro-Trump as an alternative to the polls, right? So there are a couple of advantages. One is, generally speaking, people are probably a bit more honest with their social media tweets, right? Otherwise, they wouldn't be tweeting these kind of things. So it represents their true opinion. Of course, we have to do some kind of filtering, right? First of all, we need to remove obviously fake posts. And we also want to make sure that these are US users, not users from out of the United States, which cannot vote. So, those are the things we correct for. And also we know that there are certain biases on Twitter, on social media. For example, user base tends to be a bit more liberal, so we need to account for those biases as well. But once we've done that, I think it's a kind of data set which is highly valuable because, first of all, you have much, much larger data than the polls. And also you get a lot more information because Twitter users, a lot of them self-identify their location. So you know that, this user comes from Florida, for example, and therefore, his vote will count in Florida. And not only that, he will even identify himself or herself in a particular city. So we can even get down to a more granular level, like, in a county level, for example, which we'll get into a little bit later. But just with the state level information, I think we can already do a lot with it. So on this slide, for example, what you can see is the comparison of the average polls versus what we get from the sentiment analysis on a state-by-state basis. So these are the kind of swing states, right, where you can see, a lot of times polls and sentiment analysis agree with each other, but there are some states where they do not. So if you look at Florida, Georgia, North Carolina, for example, then you can see that, they disagree. And whereas polls show Joe Biden in the lead, actually sentiment analysis show that Donald Trump is in the lead. And then you look at a state like Pennsylvania, for example, which at that time was perceived as a very hotly contested swing state. But sentiment analysis actually shows that Joe Biden was in an even bigger lead than the poll suggests. So it gives us, if not more accurate information, but more kind of, an alternative information to verify the polls. And in particular, if you look at Florida, for example, it shows Donald Trump in a very clear lead. And where does that lead come from? And as I mentioned, we can actually break it down into even more granular levels. So in this case, we can look at the county level geographical information. And what happens is actually the US Census provides demographic information at a county level, and we can overlay with our analysis. And what we find is that actually the counties in Florida with very high Hispanic population are actually more favorable for Donald Trump than for Joe Biden. So this kind of contradicts the narrative that, let's say, the Democrats are popular with Hispanics. We know that actually Democrats are not popular with all of the Hispanics, especially in Florida, where there's a huge Cuban population. On the other hand, if you look at Arizona, for example, where the results are very close, and then we do the same analysis, demographic analysis, where we overlay the demographic information at the county level, and we can see that in counties where there are a lot of Hispanic voters, Donald Trump is not in the lead, Joe Biden is in the lead. So that kind of gives us interesting information as well. So what I'm trying to show you here is basically, okay, this chart is first of all can be updated on a daily basis and even on a real-time basis, where we look at the tweets, as frequently as we like to update this information. And we can see that, okay, in some states, there are much closer results than the poll would suggest. So especially in the states where the results came out first, if you remember on the election night, actually Florida, Georgia, I think North Carolina results came out first. It doesn't mean that they were decided first, but the poll numbers or the actual vote numbers were released first. It was showing that Donald Trump was in the lead. And it seems to be a surprise to the market, because if you look at the betting market, actually the odds for Donald Trump flipped from being the underdog to in the lead. But for us, it was not a huge surprise anyway. And moreover, if you look at the other states like Michigan, Pennsylvania, Wisconsin, where we actually have pretty high confidence that Joe Biden is going to win. So if you just count all the electoral votes based on the sentiment analysis, we know that Joe Biden can probably win the presidency, even losing some of these southern states. So, for us, it was a very, very valuable information, and for clients as well. Now, of course, you can say that, okay, hindsight is 2020. You could have interpreted the results either way, but even before the election, I think it's fair to say that, okay, the results are probably, number one, closer than what the polls are suggesting, and number two, Joe Biden is still likely to win the electoral votes overall. So, we were able to get this kind of information before the results came out, combined with other information, to advise investors on how to position themselves before and after the election day. So it was very, very valuable information. And I think that this kind of analysis is not only useful for investors, but it can be used broadly, right, for pollsters, for political analysts, et cetera, et cetera. So I'm sure that going forward, sentiment analysis, NLP will be used a lot more frequently in this kind of scenario where it remedies a lot of drawbacks of traditional polling techniques. So that's one example where we partnered with, a third data vendor to use public data and come up with a product that helps our investor with their decision-making process. And the next example is to use JPMorgan proprietary data and to streamline investment research process. So here I show you examples of our research reports that we produce. So that's what they look like, and these also happen to be the reports that describe what I'm going to talk about next. So these are basically extracting sentiments and thematics from research reports. Okay, so as you can probably imagine, JPMorgan Research produces hundreds of reports like this every day, and thousands and hundreds of thousands every year, right? So it has a very, very rich content in it. And this is very valuable because it is very, very domain specific to finance and to investing in particular. Any corpus you find in the public domain on the internet will not be as domain specific as the ones we produce at JPMorgan or at other, let's say, research reports from other investment banks. Just to kind of show you a more concrete example. For example, what we do is, let's say we look at one report, right? And then we measure the distance of or similarities between the words, and we break it up into 400 dimensions. But over here, we'll show you in 3 dimensions just to illustrate the point. So for example, a word like driver, if you look at it on the chart on the left-hand side, a word like driver, for example, in our research reports, what is it most closely associated with? It's most closely associated with a word like a contributor, right? So, the driver of stock price is, let's say, higher profit margin, let's say, right? So it's associated with contributor. A word like Apple, closely associated with iPhone, so that's understandable. Whereas if you look at a public corpus, the word driver is probably going to be associated with car, automobile, etc., much more than the word contributor. And Apple, maybe fruits, bananas, etc., right? So that's the main difference between using a domain-specific corpus versus a public one. And to give you an even more extensive example, let's say if we were interested in the word dividend. So if you look on the right, you see, okay, here are the keywords, right? Dividend increase, dividend hike, etc., which are part of, let's say our keywords. So these immediately show up if you look for the word dividend. But, things like buyback, stock repurchase, these sort of things also show up with very close distance. So that makes sense, right? But, besides these obvious connections, words that also show up quite frequently are things like rate cuts, rate hikes, etc. So over there, I think it's actually quite interesting because it is actually not a given that interest rates have anything to do with dividends, right? Like economically, I think, yes, we can see that there is probably some connection, but it's far from clear cut that whenever interest rate goes up, dividend will be impacted, et cetera, et cetera. But, our algorithm is able to detect that whenever dividend as a keyword shows up, interest rates are also mentioned probably as one of the drivers and vice versa. So, it is able to detect economic relationships that are far from obvious, which to us is a very valuable tool, right? Like even if, let's say I'm the expert in dividends, I understand that there's a connection. It may not be obvious to everyone, right? And if you look even further, things like tax hike, for example, general election, these things become less and less obvious that are related to dividends. But here's the relationship that a machine learning model is able to tell us through looking through all of the research reports. So that becomes very, very valuable, right? And it allows us to do a lot of things, which I will talk a little bit later about, right? But there's one more thing I want to mention, which is, again, comes back to specifically the JPMorgan research reports, and that is when we do this kind of analysis, actually there's one obstacle that we have to overcome, which is actually words with polar opposite meanings can appear in the same context. So imagine a research report where analyst mentions we have a bullish outlook on the stock versus we have a bearish outlook on the stock. Now, bullish and bearish are completely opposite words with opposite meanings, but it appear in the same context. So, if we just measure the distance between these two words, it may seem like they are very similar, and that's not what we want. Usually what we need is some kind of labeling to say, okay, this word is positive, that word is negative. And of course, it's, number one, very labor intensive. Number two, the labeling may not be accurate, right? Like bullish and bearish, I think is something obvious. But a lot of times, let's say when I look at some of the other documents, especially finance related, for example, I could read central bank statements. And a lot of times I don't even have any idea what the central banker is talking about, right? So to make sure that the labeling is accurate is actually quite challenging. But at JPMorgan, we have the luxury of having these research reports already labeled, right, in the form of overweight, underweight, and neutral, right, per report. Now, of course, we cannot label every single word, every single sentence, but that label of the report is already very valuable, right? It's attached to every single research report, and it is labeled by the analysts themselves, so we can be sure that it is 100% accurate. So because of that, we can kind of measure the polarity of the words. So, strong, robust, solid goes into the positive dimension, weak, lackluster goes to the negative dimension, even though they appear in the same context. So, that's something that's kind of specific to of proprietary data, which is not available in the public data. Again, just with this sort of information, I hope you can see that there's a lot of applications in it. For example, we can measure what are the most popular words that appear in analyst reports every day or every week. Maybe back in 2018, the word tariff would have appeared in most reports. And maybe most of the reports will have kind of a bearish outlook, right? So that shows, okay, maybe the biggest concern for investors would be tariffs, right? And in 2020, would have probably been the word COVID, right? And this year, maybe it's the word inflation. So by looking at all of the buzzwords, so to speak, in the reports, we can identify, okay, which are the themes that drives the market, which are the themes that investors are most concerned about, and combined with polarity, we can see, okay, whether the sentiments surrounding these themes are positive or negative, right? And of course, I gave simple examples, but obviously we can look at different themes. So at any one time, we have many different themes, and they all have different sentiment score attached to them. So that's something as a kind of qualitative decision-making process is quite valuable. But there's something else which is quite interesting as well. So we can actually use this methodology for building investable products like thematic baskets. So whereas before, the way we build these baskets, which are baskets of stocks that are available for investors to buy or sell, right? Let's say we think of a theme like 5G. What we do is we go to every single sector analyst and ask them, okay, within your sector coverage, what are some of the stocks that are most exposed to 5G, right? Please submit a list of stocks by the end of the week. And as you can imagine, we have hundreds of sector analysts, right? They may be busy with their own things. They may not get back to you on time. So to construct a basket, it can be extremely labor intensive and not scalable. But these thematic baskets are very, very popular with our investors, right? So what we do is we can use this kind of mechanism to automate the construction of a basket. So let's say in the case of 5G, what we do is we first look for terms that are closely associated with 5G. Now, I'm not like a telecommunications analyst, so most of these words I don't understand, but I think it's fair to say that 4G is fair. I mean, it's very close to 5G, right? Base stations, et cetera, et cetera. So once we've identified these keywords based on the JPMorgan research report corpus, what we do is we look at stocks on which these keywords appear quite frequently in the news articles that contain these stocks, right? So let's say a company like AT&T, we see a lot of news articles in it, and a lot of times it will contain the word 5G or 4G, and then we know that, okay, this company is highly exposed to 5G, right? And once we've done that, we can screen for a list of stocks with a minimum threshold of media exposure, and a basket is then constructed. Of course, at this stage, we're still not able to completely automate this process. So let's say that list of keywords, we still need to manually eliminate the ones that are obviously wrong, right? And then a list of stocks as well, the ones that are obviously not suitable will be eliminated manually. But by employing this process, it is able to construct baskets in a much, much faster manner and reduces labor intensity dramatically. So we call this process QUEST, quantitatively selected themes, which, as you can see, we took a little liberty in the acronyms. But it's a process that right now we actively employ to develop thematic baskets for our investors. So that's the second example I want to give on the application of NLP in investment research. And that basically brings me to the end of the presentation. I'll be very happy to answer any questions the others may have.
So thank you, Peng, for the awesome presentation. Yeah, we have a question actually. The question is about the connection between the hypothesis if Biden wins, stocks would rise, and it's being confirmed through the sentiment. Is that true? Can you elaborate on that?
Yeah, sure. So we don't do that. We basically imagine it to be kind of a poll, right? But taking place on the social media. So what we do is we look at each tweet, and then let's say, okay, first of all, we look at whether a tweet contains the word Biden or Trump, or let's say Democrats, Republican, whatever it is. So we select a subset of tweets, and then we analyze each of these tweets. We say, okay, is this tweet based on the sentiment pro-Biden or pro-Trump, right? And then we say, okay, what? And then we don't count the number of tweets. We count the user, and we say, okay, maybe there are 300,000 users that have tweeted pro-Biden tweets, and then we have 295,000 users that have tweeted pro-Trump tweets. So Biden beats Trump by, let's say, 500,000, 50,000 votes, whatever it is. Now, of course, again, like I said, we adjust for the biases, et cetera, et cetera. So it's like a poll, right? But we think that, okay, it's a real time. People probably tend to tell the truth, on their Twitter account more than over the phone to a poster. So that's kind of how we come up with the conclusion. Or let's say in this state, Biden is leading. In that state, Donald Trump's leading, et cetera, et cetera.
Mm-hmm. Awesome. So I think there is another question that just came in. 1 second. So Michelle is asking, relating to the keywords mentioned for every year. So let's say last year was COVID, this year is inflation. So what is the objective of looking at the sentiment surrounding these words? Like, do you look at the social media to do that?
Yeah, so what we do is we look at analyst reports, not social media, but analyst reports. So these are specific to JPMorgan, and then we say, okay, like let's say that the word inflation maybe used to be mentioned in 20% of analyst reports, but now it's being mentioned 60% of the analyst reports, for example, right? And then so okay, that may be the number one kind of keyword that is mentioned. Number two keyword may be, okay, stimulus, let's say, right? Number three keyword may be COVID, let's say, right? At the current point in time. So, okay, how does that help us? So what's the goal of looking at these buzzwords? I think there's a couple of things. One is to say, okay, what do investors care about? What is the biggest concern? Like for an investor, maybe I can think of 3 or 4 risks that could move the market, but maybe I'm missing something. I compare my top 5 risks versus what I can mine from analyst reports. Am I missing something, or do I have everything covered? So that is important, right? I can understand what are the risk factors. That is one thing. Another thing is commercially, maybe it helps us as like sell-side analysts to say, okay, if an investor is concerned with a theme like inflation, then we'll construct a basket or investment solution that helps investor hedge inflation. Okay, and this could be a commercially successful product. So it helps us from a commercial perspective as well.
So unfortunately, we have 2 more questions, but our time is almost over. So if you would like to connect to the people who are asking the questions, and maybe you can answer these questions afterwards. So it's really exciting to see different applications of the NLP in the investment research. Also, thanks for the audience who had interesting questions and attended this session. So I want to remind you all to visit the Expo tab and register to win prizes from the companies on the display. Thank you, everyone.
Thank you.